Welcome back to TechKidFX for another Hbar price prediction update, which at the time of this recording is holding below the 20-day MA here on the 1-hour chart, which is now acting as resistance for us to continue gearing up. At the time of this recording, we have also lost a key area of support at around the $0.0639 mark, which is now acting as resistance. We have also continued to obey the Elliot wave structures, where we have been seeing a bit of a breakdown to the lower side in the formation of this wave 2, in a move that has now managed to get into the minimum retracement area, which is highlighted here on the charts using this red target area. And all this is playing out after we fully peaked in the formation of that first wave in a move that gave us a high at around the $0.0779 mark. And now my primary scenario is that whatever we are seeing here on the Hbar chart is the start of an impulsive wave in the formation of these higher Elliot wave count 3 to the upper side. And before I get further into the technical analysis to give you the short-term scenarios that I'm expecting here on the Hbar chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to first get into the fundamental analysis, where you can see that here on the Forex factory today we have the CPI data release, and this is what is going to give the market today a lot of volatility later in the day. And once we have the volatility, then I think all these charts and also Hbar will have a clear direction on where the market is taking us next. And in case the volatility is positive to the market, that is give us a lot of buying pressure, then there are high chances that Hbar is going to start gearing up, continue unlocking higher prices to fully maximize our target areas in the formation of this wave 3, and sketching out my target area to the upside in the formation of this wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That now gives me a target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.0964 mark. And that is the minimum that we can expect Hbar to do here on the short-term scenarios in case we start gearing up in the formation of that wave 3. And since here on the charts we are holding within the minimum retracement area in the formation of this wave 2 that I was able to come up with using the Fibonacci's by connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area between the fib level 0.5 and the fib level 0.78, which is an area that you have continued to hold within. And as long as we are holding within this red target area, I'm expecting to see a reversal within this red target area, continue gearing up, continue unlocking higher prices. And the first move that will give me the first confirmation that we are back in the formation of that wave 3 is a break above the wave 1 high, which lies at around the $0.078 mark. And the moment you manage to break above it and continue holding above it, then that will be enough confirmation that you are back in the formation of that wave 3, and that Hbar is going to continue unlocking higher prices to fully maximize our target areas. We also need to have a worst case scenario that we can expect here on the Hbar chart in case the CPI data has a negative impact on the market. And in case such a scenario plays out, then I'll be expecting massive sell-off here on the Hbar chart. And as long as we are holding within this red target area, then there are high chances that we are still going to see the reversal within the red target area in the formation of that wave 3. But the moment we lose our red target area, there are high chances that we might continue seeing lower prices in a move that would suggest an alternative scenario here on the Hbar chart. And before I get to that alternative scenario, it's good that we have a brief recap of what has been happening on the long-term scenarios, where you can see that we bottomed out in the formation of these larger Elliot wave count 2 right here in yellow within this yellow target area. And now my primary scenario is that whatever we are seeing is the start of an impulsive wave in the formation of this wave 3, and because of its impulsive nature, I'm also expecting to see a 5 wave structure in formation within the formation of the wave 3, having the wave 5 giving us the high for that wave 3, and it is this Elliot wave structure right here in blue, which is the micro Elliot wave count within the formation of that larger Elliot wave count 3 to the upper side, where I now believe that we picked in that first wave, seen a corrective structure in the wave 2, and now the primary scenario is that whatever we are seeing is the formation of that wave 3, and as a result of the impulsive nature in the formation of that wave 3, that's the reason as to why you can see I have a micro Elliot wave count within the formation of this wave 3 of this Elliot wave structure right here in red. In case we lose our red target area down here and continue seeing further breakdown to the lower side, then I'll have to adjust my Elliot wave structure, where we can term this whole structure giving us a high at around the $0.0778 mark as the high for that first wave to the upside. So that would be the alternative scenario, having this as a wave 1. Then in case the breakdown continues out of our red target area, that will be a corrective structure in that wave 2 before we can expect a wave 3, then expect a wave 4, then the wave 5 to give us the high for that higher Elliot wave count 3 to the upper side. So that will be the alternative scenario, but it's too early for me to start having that alternative scenario since we have not yet seen that breakout out of this red target area. So I need to be a little bit patient until I see the CPI data and the impact that it's going to have on the market, and once that happens, then I'll have the right Elliot wave count that is being obeyed here on the Hbar chart. And also taking a look at the indicators on the RSI, we are trading at around the 17 mark, meaning we have managed to get into the oversold region and we have massive room for us to fully support higher prices. So the RSI is fully supporting higher prices in the formation of that wave 3. Also taking a look at the MACD, we have been able to print a bearish cross. So let's be patient and see how that plays out, and I'll be keeping you updated.